Okay, so we're going to look at the pairs that are currently on our watch list for the last week of July. And currently we're looking at Euro shorts, CHF shorts, as well as CAD longs. Those Euro shorts first expressed through Euro CAD shorts and Euro GBP shorts. Now for Euro CAD, we see that there was a change of character here after that swipe of liquidity. During that New York session on Tuesday, then we see that change of character on the way down, and I still think that this has room to go to the downside, and so I'm looking at the price action here and waiting for price to come back up into this trend line which it made here, which is also coincidentally the area of supply that it made reacting from that liquidity before giving that change of character. And if we look at the volume profile from swing high to swing low, we see that the most number of participants were also there in that new and valid area of supply. We'll be looking for price to come up there and looking for confirmation. However, from a fundamental perspective, we would be reliant on CAD being strong, which means that oil has to keep going up. If we look at oil, we see that it is in a bullish rally since the rather strong escalation of the war, and we see that oil could actually go down into discount pricing, react to that liquidity there, and could still go back up. And so if that complies with our bias, then EUR/CAD shorts would definitely be on the table for us. Next, we're looking at Euro GBP shorts as well, and so we see that price has been making these lower highs and lower lows since the 19th of June. And we see that bearish order flow, and we see from that most recent bearish expansion, we see that over here after it swiped liquidity here on the left and then changed character on the right. We see that change of character beautifully playing out over here, and we see that it has been strongly going down ever since. And so we see that area of supply is still being respected. If we zoom in, we see it has not broken that swing high, and we see that price is now going down and possibly going down further. And however, for this bias, we are looking also very heavily dependent on the strength of the GBP for this thesis to play out. Now for GBP, we are seeing that it has shown some weakness against the dollar. However, we also know that the bullish rally for the GBP has now slowed down, especially now with the fiscal concerns in the UK, with Andy Burnham now being asked the question, how is he going to follow through with the promises and all the other things that he has stated that he will do to improve the growth in the UK. And so we also notice, if we go to the gilt GBP bond yield of the last 10 years, we see that GBP has been going up. The gilt yield has been going up for that GBP government bond yield. However, we notice that GBP USD has been going down, and so this sort of tells us that GBP weakness is a little bit more highlighted here, especially given the fact that the bond yield has been going up. Usually when the bond yield goes up, the currency goes up as well, but as we can see that inverse relationship, mainly from our analysis, that because of that mistrust as well as that pessimism coming in and the credibility factors, which is now forcing them to have a higher yield because of that fear of follow through. And so we'll be waiting for some fundamental GBP news coming this week. What could really help this thesis play out would be Andy Burnham, or the fiscal policy in general, having a clear and structured plan of how it would be using its spending this year or in the next few years. And another catalyst for that GBP strength would be for the government bond yields to stabilize and have a direct relationship with that GBP rather than that inverse relationship that we see right now. And so we're looking for that to happen, and we're also looking at once again those CHF shorts because of that interest differential alone. So we're looking for CAD CHF, which is fueled by oil right now. We're looking for price to come down into discount pricing and have some liquidation here, and then a change of character. We're also looking at that for EUR CHF to go down to discount pricing to liquidate these areas of liquidity before going back up, and AUD CHF as well going down, and then before it comes up, and NZD CHF. We have that same. However, for NZD CHF, we're looking for more of a long-term opportunity here, as we notice that the most recent liquidation has actually happened here in July 2. So we count this point until this swing high as the impulse up. So we'll be waiting for a deeper pullback for NZD CHF before it goes up, and also riding on that NZD strength, we're also looking at AUD NZD shorts. However, we'll be waiting for that AUD news that will be coming out this week for CPI, and we'll be waiting for AUD to come out weaker than expected to finally solidify this. However, with the NZD strength alone, this is a solid short in my opinion. However, in order to solidify that, we'll be waiting for that AUD news to be coming out. If, let's say, the AUD news would be coming out stronger than expected, we would probably see some more bullish rallies for AUD NZD, target these areas of liquidity that are deeper in premium pricing before coming down. GBP AUD is the same. We'll be waiting for how the fiscal policy reacts this coming week, as well as any bond yield news for the gilt yield, as well as the AUD news. An ideal scenario for this would be a weak GBP and a stronger than expected data to come out for the AUD. But of course, we'll be waiting for that liquidation of liquidity in premium pricing, then that change of character before coming in. And we also have that GBP CAD opportunity, relying on GBP weakness and CAD strength. And so for that, we'll be relying on the oil price continuing to reach higher highs, and for the war in Iran to not de-escalate in a rapid fashion. So we're looking for, once again, internal that deeper liquidation into premium pricing before we consider shorts for GBP CAD. And the same goes for NZD CAD. Right now, we'll be waiting again for that premium pricing before we consider any shorts. And EUR/AUD is a bit unclear for me at this time. We have no liquidity present in premium pricing, so I think that this may continue going up. However, fundamentally speaking, I am trusting in the euro being weak because of their decisive views on policy that they would want to hold, and that was something weaker than expected because of the rate hike mentions coming for September, and now they have that hold, and so the expectation itself is making euro weak, which was also seen in the other euro pairs. And I will be staying away from those indices for next week, as well as the US dollar, because of the FOMC news, the meeting, as well as the PCE inflation data that will be coming out next week. And so this would make the US dollar a bit more volatile. So I will be staying out of that. However, my bias for the US dollar is still mildly bullish because of their response to the supply oil shocks. And so we'll be seeing what that would do to gold and oil. However, for gold, I also like to mention that I'm also bullish on gold. I'm expecting it to go down into this POC of that volume profile where the most number of participants were located, and so we're expecting price to go down there first before doing anything. However, on the daily time frame, we see that gold is now retraced back into that area of demand that started at the start of the war. We see that area of demand over here. We see that liquidation and then that change of character, which produced that bullish expansion going up on the daily time frame. And so we're looking at price coming back down, which it did, and reacting from that, which I believe it will react from strongly and reject, as gold cannot also keep going down the way that it is for a long and sustained period of time. It has to go up, and I think that gold will react in this eventually, if not next week, maybe in the weeks to come.